Hi, let's cover my Elliott Wave analysis on Bitcoin on the daily time frame. And I like to start by covering this structure to the upside from 74K to the all-time high. Is this move to the upside corrective or is it motive? The answer to that question will have a great impact on the potential Elliott Wave scenarios here on the daily time frame and their probabilities. Now, it's generally easiest to try and count a motive wave towards the upside, because if you cannot count a high probability motive wave to the upside here, you're very likely looking at something corrective. So let's open my folder here. This is an impulse to the upside. This is your only possibility of counting this move to the upside as a motive wave, because diagonals here do not work. Both a contracting diagonal as well as an expanding diagonal are invalid. Now, with an impulse, you need to count your 1, 2s, 3, and your 4, 5s. These ranges here are overlapping ranges, which means these basically have to be your wave 4s and 5s, because a wave 2 and a wave 4 cannot overlap in an impulse, only in a diagonal. But as explained, diagonals are invalid. So that means your 1, 2s have to start somewhere there, and these are your wave 4, 5s. But that means that your wave 4s are 6 times or over 6 times the size in time compared to your wave 2s, which decreases the probabilities for those to be wave 4s matching with these wave 2s. And also, your first wave 4 touched the 0.618 Fibonacci retracement taken from low 2 to high 3, which is generally regarded as an invalidation of a wave 4. It's not what you like to see. So this decreases the probabilities for this move to the upside to be a motive wave structure, increasing the probabilities that this structure to the upside is corrective. Now that means you only have 3 options as an Elliott Wave analyst, because this high is now going to be either a wave B or an X, which means this move is going to be either a wave A or a W, and then you have this structure to the downside, right? Now the first scenario, which initially will always be your primary as per the theory, would be a flat, because the moment price takes out this high here of the first move down, and this move up is corrective, your highest probability scenario is initially always a flat structure. So you have wave A, wave B, and you look for wave C to the downside. Wave C should be a motive wave, 1, 2, 3, 4, 5 impulse in this case, and preferably your wave C moves below the low of wave A at 74.4K. That is most common, which would result in an expanded flat. Wave B moves above the origin of wave A, and then you get your wave C moves below the low of wave A. A running flat is an option. A, B, and C does not take out the low of wave A, but a running flat is the rarest flat structure, and an expanded flat like this, where C takes out the low of A, is the most common flat structure. So naturally, you're looking for wave C to take out the low of wave A. Now this move down has to then be counted as an impulse to the downside. 1, 2, 3, 4, 5. Wave 4 is long, ending after the 5 fib time, but at least not after the 6 fib time, right? It's still a long wave 4, but there's no hard invalidations in this case. Wave 4 did not touch the 0.618 retracement from 2 to 3, so that is good. There's no overlap between wave 1 and 4, so that is also good. And preferably your wave 4 is in and you're looking for a wave 5 to the downside, just to make sure this wave 4 is not going to extend in time even further. And then for this wave 5, you preferably then have your 1, 2, you look for a 3, and eventually your wave 4s and your wave 5s. Again, preferably wave C ends below 74.4K. Now that is always going to be your primary. A secondary is going to be a WXY. So the moment price takes out the high here, your first structure will be a flat, your second one will be a WXY. Now wave W then has to be a simple zigzag to the downside, as wave W cannot internally be a WXY. It has to be an ABC, either a flat or a zigzag structure. Now then you have your wave X, and then you look for your wave Y. Wave Y can be 3 structures in a sideways WXY, and that is a triangle, a zigzag, or a flat. If wave W is a zigzag, wave Y cannot be a zigzag. We cannot count a double zigzag here, because wave X moved beyond the origin of wave W, which is an invalidation of a double zigzag. Now in this particular scenario, if wave W here is a sharp move down, it has to be a zigzag family structure. We cannot count a flat here unless this A, B, and this wave C is like your ending diagonal C of a flat structure. But basically you're looking for wave Y triangle or a flat initially. Flat, quite unlikely. We need to move all the way up to all-time high, which is definitely not happening at the moment. So one can consider a triangle. However, the issue with this scenario is that your wave B is very shallow. The most common target for a B is the golden pocket to the 786. Second, 05886. Rarest target, 382. You really like a wave B to be deeper than the 0.382. On log, it touched the 382. On linear, it did not even touch the 0.382. So it's a very shallow wave B. Second reason why this is not a primary is because in a triangle, you preferably wait for at least a wave D to be in before giving this any sort of high probabilities. Preferably D is in and you already start moving down in a wave E. Generally, before wave D is in, other scenarios have higher probabilities, WXYs, or in this case, impulses or whatever, right? So you need to be patient with triangles, right? Before counting a triangle, or let's say before wave D is in and you're counting a triangle as your primary, 9 times out of 10, you'll probably be wrong. And finally, you can see the two invalidations. And you can also see that wave C got very close to the low of A, which is an invalidation. C does not have a lot of wiggle room anymore, a couple of dollars before you reach invalidation. So preferably, that's the low of C. If we're looking for a D to the upside, D has to start with a motive wave structure, 1, 2, 3, 4, 5 correction, and look for another move towards the upside, because D has to be a zigzag family structure. However, on the lower time frame, we're struggling here with this range. So yesterday I said when price was ranging here, like, yeah, we're looking for a bit of a move towards the upside, right? A bit of a bounce at least. So we got to move up here to the order block, 6-hour order block here, acting as resistance. And currently price is moving down again. Nice, nice. But the problem for the triangle is you need a motive wave. So if we then look at this structure, we can do the same as what we do on the daily. Is this a diagonal, a multi-1-2, or a impulse, high probability, right? Now, we cannot count a high probability diagonal here because this move to the upside here cannot be counted as a diagonal. And if you want to count a diagonal, you need 1, 2, 3, 4, 5, which is too early. Same with a diagonal as with a triangle. You want to wait for your fourth wave to finish. In a triangle, that's wave D. In a diagonal, that's wave 4 before like really seriously considering the potential of a diagonal. So this is too early. An expanding diagonal is also very rare if one likes to count like more like expanding structures, very, very rare. So those never are primary options. Now, second option would be like an impulse, 1, 2, 3, 4, 5, but there's overlap, so that doesn't work. And then you have a multi-1-2, 1, 2, 1, 2, and look for 3 up. However, your wave 2s are both over 6 times the size in time compared to your wave 1s, which lowers the probabilities of these being 1-2s. Now that therefore means that a diagonal isn't great, impulse is invalid, and a multi-1-2 is also not great, would be invalidated officially if you take out this low, but time is like, you know, it affects probabilities, and it's very rare for 2s to be so long. So in other words, probabilities are high that this is a corrective movement to the upside. Now sure, price can create a larger corrective structure, WXY double zigzag, sideways WXY, a flat structure, local triangle, whatever, right? But all of these structures are bearish as you're still looking for price to take out this low. And that is the conclusion of this range here on the 15. But it also means on a higher time frame that if you take out that low, you very likely take out 80K as well at some stage, which seriously affects the probabilities for a WXY with a triangle in a wave Y. This scenario here. Besides the fact B is very tiny, and wave D is not even finished. And then finally, your last option, if price takes out the origin of the first wave here, besides the flat and the WXY I showed you, is a very large triangle. Alternative, till proven otherwise, definitely not a primary, A, B, C, D, E. Again, gotta wait for wave D to be in and then go down for wave E. Now you may ask yourself, okay, but how does this relate to larger context waves? Well, we could always count this as 1, that's your bull market, 2, 3, sideways, 4, 5. Right? However, for this scenario, you need to wait for your wave D. Now, there is a way to end a wave 5 at the all-time high, and that would be with an ending diagonal. And then you basically count the bull market from 15K as a wave 1, 2, 3, 4 ending diagonal in a wave 5. However, the problem of this ending diagonal is wave 1. So in an ending diagonal, all of these subwaves have to be zigzag family structures. You're looking for 3 wave structures in all of the waves. But if we look at wave 1 in particular, and I zoom in, then you can see that this structure to the upside is by far a highest probability impulsive move, where you have your 1-2s, your sharp wave 3 on increasing volume, and then you get your wave 4s and your wave 5s. There is no way that this structure to the upside is a highest probability zigzag, as then you basically need to count wave A, B, and this is your tiny wave C, so very long A, tiny C, or you need like an A here, B, and a very long C. So in both cases, the ratio between A and C will be off. It will be alternatively a zigzag. Primarily, it would be counted as an impulsive structure to the upside. So that affects the probabilities for this scenario. But after a ending diagonal, you would start something new. So you can have still a completely brand new corrective structure like WXYs, sharp zigzags, etc. And we'll just take it range by range, which is also what I write in the conclusion. Because on a daily time frame, these are the thoughts, these are the probabilities. But what I generally like to do as an analyst, and as you see on YouTube as well, is I kind of tackle stuff range by range and motive wave per motive wave, right? Because I always say every new range gives you all the information that you need. Price is currently moving to the downside. If the range is a higher probability corrective structure, you're looking for that low or a continuation of the range minimum, and we can then check the range again at a later stage. So that is also what I write here. But first, the move up to the all-time high from 74K has a higher probability of being a corrective zigzag family structure to the upside, which then naturally results in the following order of scenarios and probabilities, being a flat ABC, a sideways WX, and then a wave Y, and a larger triangle. A flat will have the highest probabilities initially till proven otherwise. A WXY with a triangle in Y will very much be an alternative because of your wave B, D not in, and the lower time frame struggles at the moment. And then a larger triangle is also an alternative till proven otherwise. And then finally, a ending diagonal here, also an alternative structure because of your wave 1. Now, what I generally like to do, as explained, is focus on the local ranges. And you can see here also the probabilities of the current local range. This range here on the 15-minute time frame has higher probabilities of being a corrective structure, not a motive wave structure, which increases the probabilities to still take out this low and as a bare minimum continue the range. You can easily still get larger corrective structures. It's weakened as well, which generally results in sideways price action. And it also depends on the move towards the downside. Is this motive or corrective? Well, if these are a bunch of 1-2s, this can be a 3, and you look for a couple 4-5s, decreasing volume into support, and then you look for a bit of a bounce. Multi 1-2, 1-2, 1-2, and there's 3 increasing volume, right? If price moves down on increasing volume, you have to maybe be aware of lower prices. For the bulls, if price moves to the upside back in this range without taking out the low, there is higher probabilities of this being a 3-wave structure, which increases the probabilities to take out this high and as a bare minimum continue the range. But that initially will still result in a larger corrective structure where you simply have a 3, and you look for another 3 here for a larger 3-wave structure and afterwards take out the low. The bulls really have to do a lot of work, and we will need a lot more information to flip probabilities here locally. So we'll have to wait and see. That being said, I hope that this video was helpful or valuable to you. On the left, you can see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.